Happy Monday, traders. It is 8:02 a.m. Chicago time on Monday, the 6th of April, 2020. Thanks for joining me for episode number 1728. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Risk on sentiment across the board in the markets this morning as news comes out from several fronts. Um, for one, New York showed a slowdown in the death rate. Also, POTUS indicated that the estimates for the number of deaths in the U.S. is likely to be much higher than estimated. And the other news is an oil where the OPEC Plus meeting today was postponed to Thursday, which is not, being attributed as the reason to go higher. Oil actually gapped down and is the weakest commodity I'm watching. Crude oil May contract is trading at 27 even, down $1.33 or 4.69%. It gapped down on the open. The leader this morning is the DAX. DAX up strong today, 452 points or 4.75%. Followed by the Euro stocks up 110 points, 4.18%. The Russell up 43.5 points, really big, up 4.13%. And the S&P up $92.5, 3.75%. And the Dow is up 768 points. So the S&P was actually getting pretty close to limit up on the session last night. I did post the limits. I believe it was 2601 or so. Let me look that up. Tell you what the limits are. The 5% limit up was 2601.50. We got to 2586.75. And the reference price is 2477.50. So pretty strong open today. We're looking at a gap higher in the U.S. indices again. Risk on. There was a fair amount of news that came in overnight, and I'm not going to go over it because everybody has access to some sort of news source. Consumer confidence took a big hit in Japan, came in at 30.9 versus 36.8. That's a high tier release, and bunch of numbers out of Europe. But the looking ahead, what we're expecting. What is this? What we're expecting here at okay. What we're expecting here at 10 a the at 10 a.m. Eastern. At 10 a.m. Eastern, expecting consumer inflation to come in at 2.6%. There's not much else on the calendar. Balance of trade this evening out of the Australian markets, and that's it in terms of what's scheduled. Let's take a look at what was expected on Friday. Friday had several scenarios. Friday was opening right on top of the prior day's point of control in range in value. And the primary scenario was to look for a dip down into the 2493 area, into the 2493 area to chop around, potentially get the value low at 2477 and pop higher and into this low volume node or zone right up here, which is basically where we are now. And that didn't work out. The secondary was a push higher that takes out the prior high, partially fills in the gap zone, and then drops back in. The third scenario is the one that kind of worked out is a test of the prior day's high and then a push across the range, push across the entire range of Thursday. Here's what we actually got. Let's expand this. Um, there's the push up. We got the poke above the prior high, which was 25.25, went to 29.50, and then it consolidated. It put in a consolidation here for over an hour, and then it started to sell off below the mid, below the open, and now we're back in. We're back into the range, and so the key target is likely to be that MC point of control below, and the expectation actually was for it to break below the low and put in a fairly bearish kind of setup. It didn't do that. It held a normal variation day. We have a long liquidation type of profile where the bulk of the value area is at the low end, point of control below the IB. The market really never looked back at the mid for the session and stayed below VWAP, looked fairly weak, and finished inside. So that's what we had on Friday. It looked like it was balancing. Essentially, Friday balanced out Thursday and canceled out Thursday. What we have in this area is a fairly fat profile for these three balance days. We've gapped down on the 1st of April, and we've just held sideways for 3 days now, and now we're gapping up. In the overnight session, traded down into almost to Friday's close, which was 81.50. The low is 84.75, and has pushed up and has remained at the upper end of the range. This is where we are now at 25.75 and a quarter, with some pretty solid bids below. I'll show you that in a minute. Um, and so that's where we stand. So we actually skipped over the gap yet again. This is the gap zone here. The gap zone actually is all the way down here. It's the first day of the gap. We skipped through the gap, and we've skipped through this low volume node or zone that I outlined on Friday. So that's kind of odd there, that it's doing that. It's kind of skipping up above, back and forth through that low volume node zone, so that we don't know what the market wants in this area. So this morning, gap up, opening out of range, opening on top of this high volume node up here, which is a stock zone for me at 73. Right to 73, 50, 74, right here in this area. And so it makes for a pretty interesting open. There's a naked point of control from back here as well from the last day of March. And we're likely to continue to squeeze back into 2600, which has been quite the magnet since the sell-off. So that's where we stand currently. The overnight high 25.8675. The low is 24.8475, and 25.74 is the point of control. Where is my? So let's pull up the overnight chart. Here it is. So we open up and we are strong right away. We remained above the mid, above VWAP. We've pushed above the prior day's high immediately on the Asian session, and then took another pop here around the European Open and have been completely sideways. We have a weak high. Look at that high. It's very, very blunt, very, very flat. Double top at 86.75. Very high probability of taking that out. Volume just falling off a cliff, really. 390,000 contracts. Things are starting to look like they're getting back to normal. And that's what we've got for this morning. We have a long way to the internal close, and so I'm expecting this to continue higher, given that given the gap, given the configuration of this. I'm expecting a gap and go situation. Gap rules apply. So that's where we stand. By the way, overnight inventory is 100% long. We'll see how the response there is, knowing that it's 100% long. If we do not get what does that mean? 100% long overnight inventory. What the heck is overnight inventory? Overnight inventory essentially saying, look, compared to the prior day's close, which is this orange line right here, 81.50, where has most of the trading occurred compared to that closing price? And we can see that compared to the closing price, given that the overnight session low is 84.75, compared to that closing price, 100% of the volume traded is above the prior close, which creates an imbalance to the buy side. So we say the overnight inventory is long. What that translates in, what that indicates, rather than sounding like some um, theoretical kind of thing, intellectual thing, what this means is, because we know that pretty much all of the trading has occurred before above the prior day's close, we would expect, very important word, expect a response. We would expect some of this to balance out before or at the open. We would expect that if you came in and the market's way up, that you would take something off. That some people, depending on their trading time frame, they would take something off. What does that mean to me as a day trader? That means that if we open up and there's just very weak or very little in terms of selling, this is a long only day, and I'm going to be aggressive on the long side, and I'm going to look for a pullback or some way to get in long and hold, because it is just showing no appetite for selling at all. It's a very, very early indication that a trend day type is likely to take place. At least the easier path, the path of least resistance, will be to the upside. If we open up and then we have selling right away, then because it's overnight and the volume's not the same, then I would expect reference point. I would expect to I'd lay off of it. I'm not going to try to sell it. And then the next thing I need to watch out for is, does it fill the gap zone? How does it behave around 29.50? And if it's not able to get, excuse me, 1 second. If it's not able to get to 29.50, then this means that I would have an advantageous price to get long in the overnight mid, or ahead of that, or maybe the gap zone mid, or someplace somewhere in the middle, for a return to the open. That's what that means. It means that the gap zone is not likely to get filled, and if it doesn't get filled in the first hour, there's a historical probability of 81.5% that it's likely not to get filled for the session. Again, past performance is not necessarily indicative of future results. So when we're talking statistics, it doesn't mean that I have an 81.5% probability of if I got long that it wouldn't fill the gap zone. That's not what it means. It just means that historically that's what it's done. History is an indicator of behavior. It doesn't predict the very next trade. Remember that. Statistics, historical probabilities, backtesting does not predict the next trade. So that's what we have over in the overnight. In terms of the order flow, ooh, in terms of the order flow, here's what I meant by saying that it's pretty well bid below this order here, this group of orders. You can see it stopped right there and it moved up. This is a block order and it looks real. The only way to tell is when the market moves down, does it get brighter or not? So here's the market moving down to it, and you can see that it went from a lighter orange to a darker orange right there. There's a lot to get through here. The 2560 area, 57, really 58 to 62 has a pretty decent sized order. We do have a flat top. We do have a flat top at the high, which tells us that this is a weak high and it's likely to get tested. And the overnight session shows a strong bias to the upside. As you can see, it has blown through. You can see the big delta bars. The big delta bars have blown through size again and again and again. And there's an appetite to buy this morning. That's how things are setting up. In terms of the order flow and what things look like, let's crunch this down a bit. We look pretty clear up to 90. Remember the high is 86.75. We look pretty clear up to 90. And then beyond there, really 95 and 2600. You could see the depth. I have full depth here using the rhythmic feed, which in my opinion is the best feed out there, trading feed out there. 2600, we have liquidity that's been sitting there since ages ago. This stuff has been sitting there a long time. So as we likely to break this high, pay attention to 90, 95. These are option strike prices. 90, 95, and especially 2600. We're likely to push to 2600, consolidate up here. Below us, we just have this massive heat map color down below, as I said, 58 to 62, which has moved up from 48 to 52. So they moved it up 10 points. And then beneath there isn't all that much all the way through to about 25.30, which is right on top of Friday's high. Okay, very important to know what's out there in terms of what's resting, what's spoofing, what's chopping, what's all that, what's faking. The way to do that is through CT Bookmap here. You can get the software in a 14-day trial at ctbookmap.pro if you wish. A quick announcement. I want to remind everyone that this Friday is Good Friday. Good Friday. April 10th. It is a holiday across all exchanges. The market is not even partially open. This is like Christmas. The market is closed the entire day. So just remember that because that makes Thursday really important this week because the market participants would have exposure Friday, Saturday, Sunday into the weekend, knowing that this is an even more heavily news-based environment. And with the OPEC meeting on Thursday, there's just a lot of exposure. I'm expecting the market to really do some positioning on Thursday afternoon before we close. So again, Friday, the markets are completely closed. There is no trading taking place on Friday on any of the major exchanges. And so Thursday is likely to see some maneuvering, and we'll see how that goes. Let's see what we've got for today. So for today, the expectation here, we're gapping. We have a couple of interesting areas to pay attention to here. Then we have a flat low volume node. Then we have this area that we've used as resistance over the last 3 trading sessions, and then we've had this area which we've used as a pretty decent acceptance area. That's the outline of where the volume is and where the market has accepted or rejected prices. And so today with the gap up, I'm looking for an open auction out of range as we sit on top of this high volume node here, looking for an open auction out of range. I'm looking for the market to be somewhat responsive early, and I'm looking to push that overnight high to 90, consolidate, come back, pull in some more, and then push into 2600 above. 2600, I'm looking for a pop to 2604 before we rest. It is Monday after non-farm payrolls. We generally, and I was wrong last month, but we generally do not have much movement on this day. It's a generally quiet day. The secondary, an open auction that pushes higher immediately, then we get responsive selling that brings us back into the middle of this gap zone, and then I'm expecting it not to fill and then consolidate and hold steady here and build some sort of a profile or the fat part of the profile down here and really fill in and test out this low volume node area. Now, knowing that we are out of balance We have a third and fourth scenario. The third scenario is responsive selling to test into the gap zone below last Tuesdays or the last month day of the month below that low, below the 58.50 low, and then impulse up to drive to 2600 and then start to push and squeeze 26 to 30 and potentially 45, although the ranges have been falling quite a bit. Those are the three key scenarios that we're looking for today. So let it decide in the first 10, takes about 10 minutes or so. Let it decide in the first 10 minutes what side is going to be in control. And then we start to push from that side. Remember, we are not um, we are not bulls or bears as day traders. I'm only speaking to day traders here. I'm not a bull or a bear as a day trader. I don't have the luxury to sit here and decide uh, that I want to be long or short. As a day trader, I couldn't care less. Let's put this in a different perspective. If I were talking politics, I'm not a Democrat or a Republican. I'm actually not a Democrat or a Republican. I couldn't care less about either party. But I'm going to go in the direction that is, I'm going to listen to the argument that makes. I'm going to go vote for the argument that makes more sense to me. That's day trading. We're staying impartial until the market decides what side it wants to go in, because we don't have the luxury, or we're not taking the luxury to trade over the next 2, 3, 4 days. We're looking to pick up on which side is winning today's fight and to be on that side, to be with strength. Okay, so that's what I'm looking for today. Good luck, and I'll catch you tomorrow. Take care.